Portfolio Builder members, welcome to our Tuesday Trade Alert, where we are currently in spot silver ETF SLV. We'll start out by reviewing last week's trade from Tuesday through today, do an overview of how our program works, and then look at the top news I've collected. The big thing happening right now is the U.S.-China trade talks are collapsing before they've even started, and we are benefiting very well from this disruption in the markets. So the previous trade given out last Tuesday was long SLV with a protective collar. This is our Tuesday play and represents 10% of our total portfolio assets. We sold the 1750 call and bought the $15 put. This means we give up any profits over 1750 because we're short the call. And on the other side, if silver had collapsed, we would get a minimum of $15 a share because we're long the put. Go to today and you can see the trading price as of entering that was $16.13. And that's a screenshot from last week, by the way. Today, the SLV ETF has jumped up to $16.55, and our put option expires worthless, so you don't need to close that. You do need to buy back your short call because we want to enter into a new option caller to continue protecting this position. So today's trade is to buy to close the October 11th, 2019 1750 call. Now, in terms of the P&L, I summarize that for you at the top of each email. SLV went from 16 to 16.55 for a 42-cent profit. Sorry, that's a typo there, which resulted in a 42-cent share profit on 8,900 shares, or $3,738. And the option caller started off with a penny credit, and we closed it out for a penny debit. Now, I think the run-up on SLV is just getting started. If we have a quantitative easing phase like we did in 2008 and 9 into 2010, then this has much higher to go. Now, my personal thought is that we're going to have significantly more quantitative easing this time around because the problems are exponentially larger. Last time, it was just the U.S. housing market causing some disruptions in U.S. banks, like Lehman Brothers. There's a handful of them. This time around, it's the Chinese banks that are going into bankruptcy, and they have grown their level of debt in the last 10 years by 1,000%. That's almost 50% a year. It's absolutely insidious, and to try to paper patch this around the world, every central bank is going to be forced to print. That's why we're seeing the dollar skyrocket towards all-time highs. Now at the 99.19 mark, this just signals to us that other emerging markets and really even major markets like the euro and the yen are having trouble maintaining their value against the dollar. So the big picture is that everywhere else is really sinking and money is flooding into U.S. assets as the last safe haven. So this includes the dollar, U.S. stocks, as well as U.S. Treasuries. So how's our oh, and one more thing, we do have a new trade in here, which I won't reveal on the video, but just make sure you understand the position we just put on to short China's FXI. So that is an important part of our buy and hold portfolio that's expiring next year. It's a long put option on FXI to have the exact strike and the amount that you should be investing relative to your total portfolio. Again, look at the email. So if you're not a paid member, you may not have that information as your free trial may have expired. So I'll cover how to upgrade in a moment, but really we have quite a blessing today that the U.S. is telling us they're going to put on sanctions against capital flows to China, and they're starting to more aggressively hint at delisting Chinese securities. This should make FXI plummet if we don't really get a deal in the next few days. So we'll take a look at that in a moment. Let's go to our total returns. We trade the SPY Monday, Wednesday, Friday because of our put option at 292. Today's sell-off is not such a big deal, and we're still sitting on an 8.2% total return on the SPY since last December. It's been struggling slightly. I've been hesitant to go short the market because of the big picture, and still hesitant to do that. We got to see what comes of these trade talks in the next few days, but it looks like because of some massive sanctions being placed onto Chinese tech companies last night, that the Chinese will retaliate most likely in the next 48 hours. So my bet is that we have no trade deal, another push into the TLT, the gold market, and the silver market. And so we'll have to play the SPY by ear, but we may be doing that upside down collar to profit from a downside move in equities starting maybe Wednesday and potentially Friday. So we'll see exactly how things are shaping up. A lot of people are rumoring that Trump's going to take a little deal. I highly doubt it. We'll talk about why that's not really in his interest, nor something I believe he'll do. Now, again, the total strategy is to have a equal weight in stocks versus bonds. If you go back through the last 20 years, you can see almost always when stocks sell off, bonds rally, and vice versa. But in tandem, they tend to go up together. So it makes for a very smooth return and really is the secret sauce to how we've pulled off an average 1.7% return per month with a maximum drawdown of only 1% in a single month. So again, our portfolio is aimed at achieving a high return with very little risk. Our maximum drawdown, again, is only 1%. And if you go back to May, where the S&P 500 had a 5% decline, what was your biggest drawdown? We made 2.2%. What about in December, during the Christmas massacre, when equities were down 15%? Well, our portfolio made 1.2%. So it's not just about pulling off a consistent return of around 1 to 2%. It's doing it with extremely low volatility. That's what makes our program so popular. Now, I do want to throw out, if you go to the description box, you can get a bunch of links. One is to look at our advisory. One is for the boot camp. One is to review pricing options. We have every trade alert ever issued right here in the updates tab. That is literally the full trade alert that's ever been issued for the last 10 months. So you can go audit everything. There's no password protecting any of it. It's all open for public scrutiny. And then below that, we have our track record, which we're just looking at. Make sure to click the tabs below to see the returns of each strategy as well as the combo. And then we're about to jump into a presentation with all the top news, and that's this final link right here. Okay, so if you're listening out there and you're a paid member, let me know if you understood how to put on the short position in FXI. That currently represents 1% of our total portfolio. And we lucked out today with all this bad news. FXI is barely budged. I believe the Chinese will do everything in their power to support their equities market until they just can't. And that's when we might get a ferocious sell-off. And again, we have until February to get this to pay off for our portfolio. All right, now let me move into a quick little piece about what we do, and then we'll jump into the big news that is affecting today's trade alert. We offer daily on-the-go income trade alerts. Many of our members take these trades from their phone. It takes about 30 seconds to place, and then you are set to jet. The trade alerts are atomic bomb proof, or in this case, US-China trade war proof, in that you have a very safe strategy with put options protecting down below on the SPY and TLT. Our target return is 1% a month, and we've only had one losing month of negative 1% with an average of 1.7% profit per month. For every $100,000 invested, our goal is to generate a $1,000 profit per month. Income and safety, not growth or speculation. Our simple 4 ETF portfolio is extremely diversified and all you'll need for your retirement. Simplify your holdings, reduce your risk, get better results with less work, and weather-proof your retirement portfolio. My promise to you, I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below the SPY and TLT ETF make it impossible to lose very much money, period. So look at today. Our TLT is up big, GDX is up big, SLV is up big. The SPY had a huge sell-off, but our put option protecting that position is up big, and the short call on the SPY is also at a 99% gain. So overall, we're making money despite this volatility in the market. And remember, for every $50,000 you do deposit at your broker, you'll have $100,000 of buying power. So you can actually get twice the returns we're advertising by just taking advantage of your complete buying power. Here's the current recommendation of how to allocate capital per $100,000. 100 shares of the SPY traded Monday, Wednesday, Friday at noon. 600 shares of SLV, that's the silver spot ETF, which we trade Tuesday. Now, a heads up, as soon as that silver spot price goes to around $22 to $25 an ounce, I will rotate us into SIV. That's the mining company. So we did the same play on gold. We did GLD, spot gold, all year until we got to that $1,500 range. And then we rotated into the miners. So it makes sense. Let the spot price get very elevated, then rotate into the companies that can benefit from mining silver or gold. So gold already made the move. Now we're getting big profits every week on GDX. Now we're allowing silver to do the same move, and we'll rotate that position into SIV. And then meanwhile, TLT has been our big money maker. This is actually more weighted on the TLT favor compared to our exact model portfolio. So if you have been following this screenshot, you have made substantially more money than we're advertising currently, as I have about an extra $5,000 relative in the SPY and $5,000 less in the TLT. So for those of you following this exact setup, good for you. You're probably averaging more like 1.9% a month. Trade allocation per $66,000. This is the light setup. You throw out the Tuesday trade, 100 shares of the SPY to 200 shares of the TLT. Monday, Wednesday, Friday, you're trading the SPY. Thursday, you're trading the TLT. Buy and hold GDX. This is a great setup, a little less work and a little less risky. If you want the highest risk setup, this is your best bet. 900 shares of SLV on Tuesday, 100 shares of TLT on Thursday, and then buy and hold 100 shares of GDX. So this would throw out the safe bread and butter trades on the SPY and just focus on our higher returning portfolios. So this could dramatically increase your volatility, but also your potential profit. If you're ready to upgrade because you don't want to miss out on future trades, call Dean at 505-322-7515. Let's get you started as soon as possible. He's an expert options trader, follows our own program, does some of his own trading, very successful, and he can get you on the right path. So call Dean, 505-322-7515. Reminder, tomorrow is our paid member only webinar. You'll get an email 1 hour prior from Zoom. And then Thursday's our freebie webinar. Same thing, you'll get the Zoom email 1 hour prior. Don't forget to subscribe to our channel and click the little bell so you get automatic notifications. And here's our disclaimer before we jump into today's content. Real quickly, if you do go to the description box, click on the updates. Here's where you'll see every trade alert we've issued. We have nothing to hide. It's open to the public. People get the same results as us because our trade alerts are so predictable. Here's a testimonial. I'm picking out one testimonial a day to read. I am particularly impressed with the program in that it takes the worry out of risking your capital in a market that is driven by headlines and increasing volatility. Yes, I can lose money, but certainly not anywhere near the amount I could without this program. My results have been equal or slightly better than the overall market, but with far less risk. What is better than that? Oscar. Thanks, Oscar. We really appreciate your testimonial that came in over the weekend, and I'll read a new one tomorrow. Meanwhile, if you click on the advisory button, not a big sales pitch, guys. It's a summary of what you're going to get, when you're going to get it. Click here and we're going to qualify you to make sure you really have what it takes to follow the program. Do you have $25,000 minimum? Can you place a trade on noon Eastern daily? Which days of the week can you trade? Have you ever traded options before? So you fill this out and then you'll be connected with Dean to make sure you get the most out of the program. If you don't want to just have the fish served on a silver plate for you, join our boot camp. We're going to teach you the engineering of the strategy and how to do it completely on your own. It's a 16-week boot camp that repeats itself every 16 weeks indefinitely and has bonus trade alerts. Not heartfelt, says Oscar. Well, thank you, Oscar. I hope your TLT is paying off well today and your put options are protecting you. Is that the case? Module 6, 7, it goes on for 16 weeks, folks, and it is going to really make you an expert at our strategy. We're not trying to teach you all sorts of crazy option strategies like iron condors or butterflies or calendar spreads or naked put option writing. Simplify your life. 4 ETFs, that's all you need for the rest of your life. Half in stocks, half in bonds. Put options below, call options above. You're going to see this is the best strategy to go into retirement, protect your capital, and generate consistent gains. Now, if you do go to the options page, you can get either the advisory alone, the boot camp, plus the advisory, or just the boot camp. And we have financing plans that spread out the payments over 20 months. Okay, so let's look at today's content. And Oscar says, giddy up. So the SPY ETF, again, based on this dollar chart, we can see what the overall health of the global markets is. And the currency market's by far the heaviest traded markets in the world. And the money continues to flow into the dollar as other countries' currencies depreciate. And this is also in the face of the U.S. lowering rates and actually in the last several weeks injecting just under $200 billion into their balance sheet. And Oscar says TLT and SLV making it easy not to panic on big down moves. Sure does. So SPY ETF, I believe, is ready to break into new highs, but it has to have a resolution to this trade war. I was suspecting we may have a period of peace going into October, mainly because we saw the Chinese were willing to buy U.S. agricultural products, number one, and number two, they're celebrating their 70th anniversary of their new Communist Party. But Trump is not doing that whatsoever, and everything is aiming towards major escalation, doubling down, and I think we're about to see some major fireworks. So we'll have to start playing the SPY protective with the upside down collar. For those of you who know our strategy, it's where we sell an in-the-money call and then buy an in-the-money put. So we allow our SPY shares to essentially finance the down bet. And it's the only safe way to profit from a down move in equities. So we'll keep a close eye and make the decision on how to play the SPY tomorrow. But that's the big picture. GDX is the gold mining ETF. And it has at least a 100% move to get back to the 2012 levels. And again, the picture this time is 100 times worse than it was in 2008. That was just a little blip in the misallocated capital bubble compared to today. So I do think we have a several-year hold on GDX, and it should be a nice run. We're buying and holding GDX. So again, you'll get better tax repercussions if you can hold for over a year, and this is one position that we will be holding for most likely at least a year, maybe 2 to 3, depending on how long this trade war lasts. If you go back to the U.S. Cold War, that was decades. Go back to World War I, World War II, where the world was punishing Germany with reparations, caused the Great Depression. World War II came along. So this could be playing out nice and slow for decades to come. We'll keep a close eye on it. Here's SLV. I don't suspect we'll be holding SLV for years to come. Most likely just for a few more months until it jumps to that $22 level. At that point, we will jump into SIV. And that could very well be a position which we can hold for over a year to get that tax burden down significantly. So keep a close eye on that. TLT continues to deliver big profits. Right now, that long end of the treasury's at around 2%. I think it can go to as low as 1%, so that would push this up way, way, way higher. So we continue to buy and hold TLT for some substantial profits. This has been our biggest moneymaker this year by far, and if the trade war does continue to escalate, you're going to want to have that 40% position in TLT. In the same breath, I don't see much downside risk for the TLT unless this would be absolutely crazy, but if the Chinese were to get with all of their trading partners and try to dump their treasuries all at once, maybe, just maybe, you get a spike in yields that could pull the TLT back. So I still like having the put option below, but that would be pretty crazy for the Chinese because then they would have no dollars left to buy imports. No one trusts their currency, which only represents 1% of the total currency trading, which is something like $4 trillion a day. So their currency is really a joke, and that's also a position we want to start shorting soon. We'll take a look at that in a minute. Now, to get really long-term bearish on equities, U.S. equities, I'd like to see the corporate buyback scheme come to an end, and if LQD, which is the investment grade bond ETFs trading at all-time highs, that means companies like Microsoft, Apple, even GE have almost unlimited access to cheap credit, and they're just turning around and buying their own stock. So it's going to be hard to get a major sell-off in U.S. equities when the rates are so low. And the big macro view is that the Fed will continue to support lower rates and potentially drive these higher. Now, more scary is the Russell 2000 and the junk bond ETF HYG. It still looks relatively healthy compared to 2016 through today, but nowhere near the levels we had in 2013. So the bottom portion of the SPY is certainly having higher interest on their loans to buy back their own stocks. So if this were to start to sell off, I might get a little more critical of the SPY in terms of a long-term sell-off. FXI is your large cap Chinese companies, mainly Alibaba's in there, Tencent's in there, and then you got all the big banks and construction companies. These are all at a huge risk. Now, I was expecting that first their currency would be devalued, and then, only then would they lose control of their equity market. But the catch is if the U.S. government actually starts putting laws into place that could force Americans out of these products, then that could be a quick catalyst. So we do have a 1% total portfolio position shorting FXI at this level. So to get the exact strike and expiration date, you do need to be a member, and it's in your email today. Now, this is a risky play, but it's only 1% of our portfolio. On the upside, this can easily return 1,000%. So this 1% play could add a 10% total return to our portfolio in the next few months if this really does implode. On the other side, if they decide to say, all right, we're getting a little crazy in the next few days and come out with some sort of trade deal, or even just not escalating, then perhaps we could lose 20 to 30% on the 1% we're risking and then get out quickly. So that's the outlook on that play right now. I have not pulled the trigger on the boot camp trade, so if you have not joined the boot camp yet and you want to short the Chinese currency, I'm waiting for a little more of a signal on that. The move has already gone in our favor if we had pulled the trigger earlier, and so I'm just worried the Chinese might start screwing around with their exchange rate. If we do get a little more escalation this week come Friday, that might be the magic time to put that play on. Here's a look at the German bonds. So Germany's much better way to judge the health of China as one of their core trading partners, and their interest rates are all negative. This shows that we have plenty of room to go lower on U.S. Rates, so I do think that the TLT can go significantly higher because we have two forces pushing it. Number one, We have Trump applying pressure to China, which in turn applies pressure to the rest of the world and essentially causes all the money to flee to U.S. products. That's one. And then two, we now have the Fed buying up treasuries. So they're allowing these banks to get out of these positions for huge profits and just wiping the treasuries under the bed, under the rug. And that's where I suspect trillions of dollars of U.S. treasuries will soon live in the Fed's balance sheet. So we've got the Powell put on the treasury, and then we have the rest of the world fleeing out of their local currencies to buy up safe haven assets. Here's the spot price on gold and silver, as well as oil. So I like oil between 50 and 70 to be positive on equities from inflation risks and growth risks. Gold 1500 is a great reason to be long GDX. The miners, they can make a huge profit pulling up that barbellic relic and flipping it for $1,500 an ounce. Silver, you can see, is starting to catch up. People have been predicting it would have a big move up for quite some time. It's finally coming. And so I love our SLV play until we get to around 22 to 25. And again, that's when we'll rotate into SIV. Here's the play that I've been talking about. If we had done this when I started talking about it, we'd be up $1,000 a contract right now in the futures market. So we're going to sell short CNH. That just means we're going to sell the currency at today's conversion rate and then buy it in the future at a better conversion rate. So for every 10 cents this goes up, that will result in a $1,000 profit per futures contract. Each futures contract represents 100,000 USD. And so we're waiting to pull the trigger on that right now. Most likely I'll be recommending around 1 to 3 futures contracts per $100,000 in your portfolio. But I don't want to do it on just kind of a cat fight. Right now I feel like they're just throwing out threats. Now the sanctions are a real deal. And China says they are going to retaliate. Just to sit back and wait, we'll look at that tweet. But is this just pressure leading up to the talks Thursday, Friday? I don't mind jumping into this trade even after it's moved up significantly higher, after we definitely know the trade talks have broken down. So Thursday, Friday is the meeting, and at that point we can make a decision. What I don't want to do is have a sharp sell-off in their currency right after we go short their currency. So let's wait till the catalyst. Let's get the nail in the coffin per se, so that we can maybe miss out on some of the gain, but it'll be moving quickly in our direction, as they will most likely recalibrate the exchange rate to offset the December 15th tariffs. So I'd suspect this goes to 7.4 to 7.8 by January 2020, which means at this current level, we have anywhere from $3,500 to $8,000 profit per contract to pick up shorting their currency. There's that dollar index, cryptos staying in there. The reason to own cryptocurrencies is never better. The more you study all of the fraud in politics, money just gets pulled out of the government, sent over to corrupt places like Ukraine, then it gets laundered. And where do they hide it? They hide it all over the place. One easy way to do it is in Bitcoin and Ethereum. So we have a 1% position in Bitcoin and a 1% position in Ethereum. They have gone up significantly this year. We bought in December when it was trading around 3,500, so we've made huge gains on Bitcoin, and Ethereum, I believe, was around 80 when we got in. So we're sitting on some big gains in that, and there's no end in sight to owning those two positions. China's PMI tumbling a little bit, and this is right in the middle of their big celebration, so that's a little surprising. Okay, now here's some tweets I've collected. This is from Kyle Bass. Thanks the Czechs for cutting the Chinese state-run tumors out of their phone system. I've met with the cyber attaché for the Czech Republic, and he understands the threat that Huawei and ZTE and others pose to the democratic world. Bravo. The U.S. should follow and cut them out of America. China's foreign ministry, China will continue to take firm and forceful measures to resolutely safeguard national sovereignty, security, and development interests. One talks, U.S. Commerce Department said it's putting 28 Chinese public security bureaus and companies, including video surveillance company Hikvision, on a U.S. blacklist, accusing them of being implicated in human rights violations against Muslim minorities in Xinjiang. China Foreign Ministry said, stay tuned when asked whether China will retaliate over latest blacklist by U.S. We urge the U.S. side to immediately correct its mistake, withdraw the relevant decision, and stop interfering in China's internal affairs. Zero Hedge. Risk slides as China warns, stay tuned for retaliation over tech blacklist. Here's the meeting that's going to happen in a few days. And now they may leave a day early. James Harden came out saying that he apologizes for the GM of the Rockets. It was embarrassing that they don't want to upset their Chinese fans. Kyle Bass came out blasting him. Kyle Bass, just imagine what the NBA, James Harden, and Joe Tsai are teaching our children. Chase money while scrapping your personal values. Forget democracy, freedom, and universal suffrage that your country has fought and died for. Focus on hope, hoping the Chinese hand out money. Hashtag sellouts. Meanwhile, China has banned the NBA. Kyle Bass talking, I believe this is the owner of the Nets that he's talking to, who suddenly has taken over Alibaba from Jack Ma. So that's what happens in China. You make a successful company, you get to own like 0.1% of it and then hand it off to the Communist Party or go to jail. Kyle Bass, hey, Xi Chun-sing, your Chinese artificial intelligence company since time was just banned by the U.S. Bureau of Industry and Security as a severe U.S. security threat. And he hashtags James Harden. Beijing pulls the plug. China cancels NBA broadcasts amid outrage over Hong Kong tweet. And with all the tariff threats and supposed increase in U.S. prices, producer prices have dropped month over month. China is paying for the tariffs by devaluing their currencies. Meanwhile, banks continue to take advantage of the repo operations, which probably will never end, and is another way to increase the Fed's balance sheet without screaming QE. Rumors are it's JP Morgan that is primarily pulling this money, and they have had their hands very dirty with Chinese money. Rabobank, given the almost cartoon-like world we now live in, it's appropriate that the most honest commentary on where we now stand comes from the intellectuals or politicians. Instead, it comes from South Park. South Park had a big episode on banned in China, went viral all over CNBC this morning, and of course now it's banned in China. Now, this is why I don't think Trump will back down on China. His number one threat for the 2020 election is incredibly guilty of dealing with China. If you really want to study it, look up Rosemont Capital. There's 1 million of these hedge funds they set up. It was Joe Biden's son and a guy named Archer, Davon Archer, have set up a bunch of different funds, all with the acronym Rosemont in the front. There's probably 12 of them. They've been taking money from China and then buying out U.S. companies and transferring the intellectual rights back to China. It is outrageous, and this is why I think that Trump wants this whole Ukraine-China thing to come to air. It's putting a huge dent on Joe Biden's chances to be elected, which is very destructive for the Democratic Party because Elizabeth Warren will be their worst nightmare. and I don't think they at all wanted her to win. With all this news coming out, his odds have been plummeting, and now Hillary Clinton, who's not even running, is almost having better odds than Joe Biden. Donald Trump has a quote for, I think, that crooked Hillary Clinton should enter the race to try and steal it away from the uber-left Elizabeth Warren. Only one condition: the crooked one must explain all of her high crimes and misdemeanors, including how and why she deleted 33,000 emails after getting subpoenaed. Of course, she was heavily involved in the Ukraine scandal. Here's the big headline that sent markets fleeing today. White House looks at limiting Chinese stocks and government pension funds. So this is the second rumor coming out about capital controls to China. The White House denied the first batch, which gave us the first shock to Alibaba. But now here it comes up again. We also have Mark Rubio currently trying to pass a bill that would completely delist these Chinese companies unless they started operating under the same financial audits that U.S. companies have to operate on. And then good old Bloomberg, who's very supportive of China, gets a ton of money from China in terms of advertising, plus they have index products that funnel money over that way, continuing to critique Trump over this. Some of these are a little repetitive, just going back to the top. Joe Biden was the most perceived stock-friendly Democrat. Now Elizabeth Warren's going to have trouble winning because she's not going to have support from any of the elite rich that I can tell. So I think they are very, very upset with all this news coming out about Joe. There's that headline about the 28 companies being delisted. China's coming to the U.S. to make a deal, and we'll see. That was last evening. Elizabeth Warren. China is trying to use its market power to silence free speech and criticism of its conduct. In response, the NBA chose its pocketbook over its principles and our values. We should all be speaking out in support of those protesting for their rights. So the Chinese had certainly bought out the Biden government spot with a $1.5 billion hedge fund. Can you still not hear me, or is the audio back? Meanwhile, China is now talking about putting their military over in Hong Kong as that continues to escalate. And they're now making it illegal to wear the masks, 1 year in prison. China will not concede on government subsidies and intellectual property laws. And so that, again, is the big thing we are trying to change. If you look at Huawei, they went and sold phones at a loss and became the highest gross selling phone company in the world. But of course, they were selling it at a loss and subsidizing it from other parts of their economy. So that's totally not fair to the rest of the world, and why we're in this big trade war in the first place, much less all the stealing. The Ukraine drama continues. Turn on CNN every day for a little hysteria. I do. It's hard to listen to, but I think that most likely this is going to implode on the Democrats as they have their hands dirty in Ukraine. It was basically their headquarters for laundering billions and billions of dollars that has disappeared out of taxpayer money. So you can get mad at Trump for making a phone call, but once you look at the really the 12-year history of all the scandals and fraud that's been happening there, you'll see it was the dirtiest country in the world, where they went and set up shop, funneled billions of dollars from the IMF and from the US government, and that money has all disappeared. So this is a big can of worms that I think was opened by design. This is interesting. The central banks own a huge chunk of treasuries, and you can see the relative ratio of outstanding debt and how much is owned by each country. And so we're seeing these central banks now loading up on treasuries. Again, that's why we love the TLT. The chances of it dropping are so low right now because we not only have the entire world fleeing their own currency and buying up safe haven assets like the TLT, but on the other side, we have the Fed also buying up treasuries. So that is a safe place to put your money. If we do get a trade deal, we have the double whammy. We get all the banks selling these bonds for gigantic profits to the Fed, which is really just another bank bailout. And then they're going to have free balance sheets to go buy up securities. Now, if you do study all the political drama and related to investing, it's very typical for an administration to go punish a certain industry and then their best buddies go in and buy that up. So we saw that with the Obama administration with the coal industry and with the private education industry. There were two big sectors that did that. And so I think we may see the Chinese equities get hammered extremely low prices, and then the banks can come in there and buy it up on pennies on the dollar. So we'll see if that's really the case or not in the next few months. Chinese Commerce Ministry tells U.S. China is ready to do a deal on parts of the negotiation that both sides agree upon. So what exactly is that? They're going to buy the same amount of soybeans that they were buying 2 years ago? I don't think so. And so that's a wrap of the drama that's unfolding right now, guys. To reiterate, we're currently protected on our SPY with the put option. We'll see if we're going to continue to go long the SPY Wednesday based on what comes out in the next 12 hours. Our TLT is generating a nice profit alongside SLV and GDX. And then meanwhile, we just put on a long put option on FXI, which will allow us to get potentially a 500 to 1,000% return on a small part of our portfolio if this really does escalate in the next several months. So we're jumping the gun a little bit on the FXI just based on how poorly the dialogue has gone so far this week. Thursday and Friday, they really meet. We'll see if anything positive comes out of it. If so, expect to jump out of that FXI put and we'll be extremely long stocks. But if the more likely outcome occurs and this really implodes in the next few days and months, then we'll start doing the bearish trade on the SPY and still letting our TLT, GDX, SLV travel higher. So if you're having a rough day in your portfolio or really a rough year, you want to get a better strategy that has consistent returns and weatherproofs your portfolio, call Dean 505-322-7515. Our strategy is so easy. You're going to be bored. You'll have nothing to do. A lot of you guys are sitting in portfolios with 50 to 100 different securities. You have no idea what's going on with any given company at any given time. You're flipping through charts all day. It's a complete mess. Your room is dirty. Once you switch to our strategy, you're going to be that clean kid with a nice organized room. You know exactly where everything is. Your life becomes so much easier. Let's get you started. Call Dean 505-322-7515.